ADP coming in weak this morning as the government shutdown gets underway, putting in jeopardy the release of future data. So when it comes to employment, that may be the number we get this week, at least, down 32,000. Let's get over to Apollo Global Management Chief Economist Torsten Slok, who joins us here at Post 9. Torsten, you write recently the U.S. economy remains remarkably resilient. Does the ADP number change at all? Any of your view on that?
Well, what really is important is that the labor market is obviously showing signs of weakness, but everything else is actually looking pretty good. If you look at including Nike earnings overnight, if you look at the weekly data for retail sales, if you look at how many people travel in airplanes, if you look at GDP for Q2, the Atlanta Fed GDP for Q3, 3.8, 3.9. I mean, there is something going on with the labor market. What is that? That is likely that immigration is slowing down. So this is why the labor market slowdown is likely not a reflection of weaker demand, but it's likely a reflection of weaker supply. And that is very important because that inconsistency is now becoming more and more clear in the labor market, really relative to most other things on the economic front.
Speaking of consistency, you've been rather consistent in saying that the chances for inflation perking up are fairly high. And you've been saying that for some time. You've certainly been a guest, I believe, and am I right, Sarah, that has argued that rates should not necessarily be going down. Do you still believe that?
Absolutely. The title of my piece today was that we in the economics profession, we need to look ourselves in the mirror, because what has been going on is that we're now 6 months away from Liberation Day. And we still have arguments that, we're still just waiting for the delayed effects of what was happening with the trade war. We had so much uncertainty. All indicators of trade war uncertainty have been coming down. Indicators of economic policy uncertainty have been coming down. And on the back of that, in the meantime, you still have had GDP growth that was really strong in Q2. And again, the Atlanta Fed now saying we'll have GDP growth of almost 4% in Q3. This labor market is really standing out as a very unusual set of indicators relative to everything else that's going on.
So are you saying that you were wrong expecting inflation?
Well, I think that the case for inflation is just even stronger now, because there was already inflation coming because of tariffs. There was inflation coming because of the dollar going down. And now we have an economy that is just remarkably resilient. There are still some corners of the economy that's impacted by tariffs, yes, but these things have just not been big enough to slow things down in the aggregate. So that's why in the micro data there's some issues, but in the macro data things are still doing exceptionally well.
So you're worried about inflation not coming from tariffs, coming from a strong economy?
Both tariffs and a strong economy and a weaker dollar. And also, if you do deportations at the current pace, you also see wage growth go up in the sectors where unauthorized immigrants are working, in construction, agriculture, hotels and restaurants. So the list of bullet points for why inflation is going to be higher is just growing even further if the economy actually ends up not slowing down as much as we thought just a few months ago.
If all that's true, why is the hiring rate where it is? CapEx intentions, UMISH, right? I mean, how are those things coexisting?
So the regional Fed surveys, CapEx intentions are actually beginning to move higher. It really is correct that the labor market is at a standstill. You have very little hiring, very little firing. That is, of course, also reflecting that, well, if there is not much immigration coming in, well, then, of course, you will not have much hiring. By definition, under Biden, whoever we all voted for here is a side issue. But in the last several years, we had job creation of around 200,000 every month. Now we calculate that that's more like 50,000 every month. By definition, that means that job growth should be slower. So that's why the ADP data, of course, negative numbers, as David is saying, that's not great. But a very, very important backdrop here is to think about why is it negative? Why is it slowing? And it is absolutely slowing because immigration has slowed down.
So as an employer, my hiring decisions are based on immigration flows?
Well, if you can't find workers, if you can't find people
that's standing outside your door,
then you, of course, will have, well, then I'm not hiring many because I can't find the workers that I'm looking for. So that's why a lot of anecdotes continue to now confirm that there are challenges with finding workers, especially in the sectors where unauthorized immigrants are working. So I do think that we need to take the analysis now into saying what's going on in the labor market, what's going on elsewhere, and elsewhere just continues to be remarkably resilient.
I wonder how important is the growth of data centers and the building of them to the overall growth of the economy? And I mention that in part because I know you've been doing work. I think you recently came on and talked about perhaps the lack of a return on invested capital, at least at this point, in terms of what we're seeing in the enterprise for AI usage. But when it comes to data centers, Torsten, is that a big part of what's going on right now?
That has been contributing more to GDP growth. So that has absolutely been lifting GDP in the last 2 quarters. So this is indeed very important. Of course, there is a very important debate around, is this justified? Can the companies generate the earnings everywhere in that complex? But the bottom line is this, from a GDP perspective, has indeed been a very important factor.
You expect it to continue?
Well, the issue now becomes whether valuations can continue. So, as you know, Tesla with a PE ratio of 150 to 200, is that at the right valuation. Likewise, Nvidia, Apple, Amazon, of course, PE ratios at these levels that we're seeing, of course, require significant growth in earnings over the next several years. And given these companies are now so big, everyone expects earnings for the AI complex to begin to slow down. So it does, I know it's very circular, this discussion, but it does begin to imply that if companies can deliver on that, then everything is great. But if there's any sign of a slowdown, like you're seeing in the bi-weekly census survey of AI adoption beginning to weaken, in particular for larger companies, then you could begin to worry about the broader ramification if there is some question marks around the overall AI theme.
Yeah, well, especially given the trillions that are going to be spent and the debt markets, obviously Apollo playing an important role in that as well. Torsten, thank you.
Thank you.
Torsten Slok.